Hey, John.
Hi.
How's everything going this week?
Pretty good. How
Okay.
about yourself?
Oh, average.
Good.
Sure. But
Interesting day today,
yeah,
as
it
usual.
wasn't really a whole lot going on. Just kind of like a little bit back and forth, but at least there was, you know, some sort of movement.
Seemed like I don't know if it was rotation, if some were listening to Michael Burry or what.
Yeah, right. I know it's kind of funny how all that stuff works. It kind of takes off like wildfire.
Yeah,
Um, I always thought it was interesting, kind of how that groupthink works. Like you see something that starts trending on social media, and everybody
right,
starts beating them up. You're like, oh,
right,
well, he's been wrong 40 times before. I'm like, well,
right.
but he was
Yeah,
right, really, really right once.
right. Yeah. Broken clock is right twice a day.
That's right. Yeah. And if I guess you make the right bets, then it'll be a
Right.
very
But,
very
yeah.
expensive clock.
Yeah. Tomorrow it'll reverse itself.
That's right. That's right. Yeah. So we're gonna try to figure out what's going on here. I kind of feel like yeah, we can get rolling here.
Okay.
So I kind of think that um, I'm just going to take a bit of a step back here and kind of reframe here for the people that are watching watching
Okay.
later. So basically, I was kind of talking about this last week where I was kind of thinking this is like a wave four, uh, and kind of counting this out. You know, this might actually not be the case here where we see a bit of a higher high, but I'm not quite sure yet that we're gonna see that just yet. So hey, Dan. All right, so just to kind of reset context here, uh, typically, if you measure this whole thing together, it's a bit of a deeper retrace for wave four. I think I was pointing this out, like a week ago or something like that, before we had the rally off the bottom, where this is like that key break point, and sure enough, as expected here, the bull case did kind of materialize, even though I kind of thought that we might see something a little bit more serious, where you might see something like this and maybe even a bit lower. Instead, I think what we're seeing here is like a wave two. Um, so I'll go over the bullish scenario here in a second. Uh, sorry, I didn't mean that. I meant like a wave one. We'll do the bullish one first, and then the bearish one here in a second.
Okay.
So just overall, this is starting to follow a pretty reliable channel here. Um, we had this breakout up here, then it got sold down. You can see like a lot of concentration there. A lot of people are loading up in there, at least from like a bear standpoint. Um, and I think what we could see, just like short term here. So I mean, I don't think that this would happen faster than a couple days. Um, so we're not going to go too deep into the woods here. I just want to try to cover some ground. So overall, what if this is like a wave five up here where we make like a so slightly higher high again, I don't think it'll last long. Like if we do see another all-time high, I think that it's going to get sold down pretty quickly, just because I mean you can make the case this is a wave four. This is a longer term wave four, from like if you back it up and you look at the different wave patterns and stuff, well, like all the way from the bottom, and this is kind of seems like it's that last like five wave up, in general, or it could have already happened, right? So we talked about that last week, where we got this big rejection that kind of broke this, it broke the top of this. Oh, sorry, no, it didn't, no, but it got close, and that's really where I was kind of thinking like, okay, well, it's probably going to bounce from here, um, but overall, um, what I've been watching here is like how far this retrace goes, because that's also very important. So from peak to trough so far, and I'll redraw the bull lines here, but for peak to trough, we kind of see here that went up to this 0.618, and and some change. I think the S&P might have gone a little bit higher, if I measure it here, but it's all the same sort of thing here with the S&P versus Nasdaq. Nasdaq's selling, it's a little bit weaker, but I don't think it's going to be Yeah, well, we're already starting to see, just a pre-market open or after hours, it's already taken a bit of a digger. Um, so, so I think what we can see here is, we've got some resistance. I think the S&P probably shows it a little bit better than better than the Nasdaq, but I think I posted this earlier today where we could see something, kind of like I don't like these like megaphone patterns. I think it's, usually they're not, it's like something's not finished from another pattern. I don't really think that there's a lot of, they really like hold a lot of water anymore. At least I haven't really seen a lot of megaphone patterns that actually like behave according to expectations. So you might get, some more selling like this, and it's possible you could see this sort of like expanding diagonal. It's kind of rare, but that also means that there's more like selling pressure. What else is screaming out at me is like this is a very pronounced kind of like volume profile. So you can kind of see here that there's still a ton of sell volume, but then it's like the bears just kind of turned it off. Like that's why like I like to try to watch on down days like this because there's little nuances in the price action that come up that help us like forecast kind of like what's going to happen. I think if you guys remember, I was saying like, yeah, I think it's looking like about a bounce here, and sure enough, it did. But I didn't think that was going to be like the final bounce. They always do that. It's always like just a hair below the final target for like a wave 5, and then they blast it up like they did here, like a V shape, and then you're always a little bit of like you're always like it just invalidates the 5-wave pattern and makes it an ABC. So I don't know if that makes sense, but it's like it's totally designed to fool people. So short term, we could see something like this, where this is sort of what I was thinking might happen like earlier this morning, where it was, I think it was a little bit better on the Nasdaq. Yeah, I think it's something like that, where it was similar. I'd have to go back. I can't remember what I had for dinner yesterday. I can't remember what I did this morning either. Maybe it's early onset Alzheimer's. I don't know. But anyways, so I think what we're looking at here is the setup here for a longer, and this is the bullish scenario, to kind of round this off. I think that we've gotten high enough with these different indexes, and I mean the volume here is abysmal. I mean it's way off the cliff, even though it's around Veterans Day and people are on holidays and stuff like that. It still doesn't account for a normal trading day, and we had a normal trading day yesterday, and this amount of volume. This one is just pretty. For me, it's pretty interesting. I think that it's a pretty telltale sign here that there's not a lot of buyers left, and that the buyers that got out up here over the last day or two, those are the ones that we're having to cover because of like you see a lot of this buy delta up here. It's not a surprise that that this higher brighter sort of volume profile on the left, that's 70% of all the volume that you see on the chart. So yeah, we do have a little bit more up here, but we had a lot sold down, and I think that any bull who's sensible is probably going to say, okay, well my limit is probably this trend line for like a retrace. So cover while the covering's good, I guess. And not to be fair here, this also kind of looks like it could be a normal 1-2 setup. And what I mean by normal 1-2 setup is you get this first run off the bottom, and then you get this sort of there's a pretty big volume shelf down here at like 25, 150, and I can show you what that's like in the S&P here. But you could get something like this, just as just trying to be illustrative. So you could see something like this, where you get this, you get this 1-2 setup. There's a lot of volume here in order to support that, and I think that's probably where you're going to definitely see some sort of buy up. And I think for at least from like a timing perspective, you might see you might wake up tomorrow and markets might be like 1% down or something like that, and typically you can sort of tell when it's a higher likelihood of happening. I'll show you how. 1 second. So today, this is a fun little trick. So I really just got to dive down into like the like the smaller term charts. So we have what kind of looks like to me at first like a triangle, and triangles are typically, I mean, this is typically like I guess you could call like a pennant, right? Where actually let's do 5 minutes. But you can kind of see that all day there was really no volume, and it was very, very muted. You saw a couple of really high like sell spikes, and then you really didn't see much else after that. We kind of just saw this support. The option structure dictated that this is like if you look at the S&P, the option structure pretty much just said like floor is at 68.35 today. There was a lot of support, or 68.35 to 68.40. I don't know if you guys had a chance to go check out the options channel on my platform, but it's just like it was pretty obvious that there was going to be some support there, even though longer term it is put heavy. That's kind of why like I joined those two things together in my aging brain. But what I mean by that is there's a couple different possibilities. So you could see this sort of like quick sort of ABC in the morning where you get this pullback here, but I still think it's going to pull back a little bit more. I think it's going to be something like like what we said before here. We got this conveniently, guys. Don't let anybody tell you that like wave analysis doesn't really work, because I'll bet you a free subscription that we get some sort of meaningful high attack sort of bounce here right around at this 50 level, and at least like the 25.162 or close to it, like 25.150. Now we'll have to see like kind of how the options data rolls in, but typically, let me pull this up. And if I'm going too fast, like please let me know. You guys got to keep me honest here. So if you're looking at something like NDX, this is the options data for today. Now this has changed a little bit, of course, but you can still map that same drawing that we were doing, and you can still see here that it's got some decent support. NDX is not a good one to use. I'm just trying to illustrate here, kind of like how you read the tea leaves of this, but basically, you've got some resistance up here. Even though it looks like there's a lot of buying, you can still see that the zero gamma level here, like it's kind of like a void, I guess you could say. So kind of how to read this is once you start to approach the zero gamma level, then you get to this sort of like empty space here where there's a pretty decent amount of of just vacuum, and that usually means that price will accelerate if those levels are breached, or it'll bounce like at something like this volume this vol trigger. And I'm sorry, I hate these scripts. They overlay over some of the other levels. I wish they would fix it. I actually know the guy who put it together, and I guess Spot Gamma is very, very very, very precise about what they publish for free. So so they basically they know, they just don't want to change it. Anyways, so we work with it. Anyways, so this is the thing to note here is just that there's a lot of clustering around these levels where we saw this consolidation over the last 2 days, and typically after you put all those things together, this might not, like you might see, kind of flip it back to the other chart, you might see like this sort of move overnight and then maybe this in the morning, or maybe you'll see this overnight and then you wake up and like you wake up and you see that markets are sitting right here, and that's a layup long, I guess you could say, where like if you buy the open and these guys kind of rip it higher, that could be nice. So John, I think you mentioned something about like your TQQQs. That would be like sort of like a nice day trade, but I would put a stop below like the 50. So if they do end up driving lower than something like this, like the 25.150 level, then odds are you're going to see probably something along the lines of so hold on, let me draw this. I think this might be nice for you guys to illustrate. So just kind of respecting the levels here. And again, this won't be, all at once. This would take place probably over, over maybe the rest of the week, where you could see maybe like a deeper retrace. But this is what I'm talking about right here, where like if you want to jump in and just try like a day trade long, you might get that afternoon buy up that's been happening, like every day, So, like you get the sell in the morning, and then everybody buys it up throughout the rest of the day, and then you get a little bit of profit taking, a little bit of distribution, but that's just kind of like how the cycle goes at this stage of the market. So really, what we're trying to target is like what's a good place for like just a short or like a short term sort of entry. So right here is a good place. Now it's possible that it kind of depends on the timing. So like we've got 2 days here. We have what kind of data do we have tomorrow? We've got inflation, but I don't know if they're actually publishing those numbers. Government's still like shut down, right? So they're not publishing the numbers. I think we're using like ADP payroll data and stuff like, yeah, I think the Bureau of Labor Statistics not reporting. Well, anyways, if we'll get something, I guess, somebody knows something, right? So either, there'll be some sort of news event or whatever, but like you can kind of tell that like, the charts are just kind of set up for like this small little pullback. And, but still, like if you kind of zoom out, like if this happens by Friday and you get this sort of retracement back down, and this might be a little steep, might be something like this. I think that this is, something maybe like this where you get up to the sell band might be reasonable. There's been a lot of distribution up here. You could get some sort of brief run up like this, but that would be one of those things where it's like, yeah, you probably shouldn't be greedy, and you could see like a head and shoulders pattern appear. So short term, that's kind of what I'm thinking, and longer term, I'd say over the next. So that would be like till Friday, I'd say. If that's,
I think they are expecting the number to come out tomorrow.
They are? Okay. Thanks, Dad. That's good. Appreciate that. So I'm kind of thinking that's probably what we'll see by Friday is like, we've got a little bit of this buy up and consolidation, and then we get the, we get that tear down again. But that's, gaps fill, right? So I think it's likely that you'll see not just like a test of this 0.5, but even if it does head back lower, as I was mentioning before, this is like that classic, 5-wave setup here. So let me get back into that. So that's like next week and into the week after. So let me zoom out and clean up some of the junk. Is this helpful? I always like to try to ask sometimes, because sometimes I don't even know if I understand myself.
Well, we'll know when Nvidia's earnings come out next week. We'll know whether it's.
That's right. And what's funny about it too is you can kind of tell where the earnings are going to head just by where the market's going. So if the market bids up the price of Nvidia all day or like all week, it's likely going to be a sell. I mean, not always, not a guarantee, but most often, like if you've had an entire quarter of just nothing but bull run for all these, mega cap companies, typically you'll see the earnings get sold. And that's just kind of like a, buy, and then they reset the cycle for next earnings. But, anyways, it's just speculation at this time, we'll see. But longer term, this is a bullish setup where you could see this. So what I was talking about before with like, trying to catch the knife, like this is sort of like the buy zone, where what I would do if I was trying to day trade this using like an ETF or something like that is so like I would like maybe buy like a smaller position at like this 50%. I do like a like a 1 unit buy or something like that. And this is like if I was there trading it, that kind of thing. If I'm going out and cutting the grass and stuff, like I would want to probably wait for maybe a little bit better of a setup, so I could feel all right leaving it alone. But sorry, popping mic. But this sort of area here, I kind of like to call it the buy box. Oops. Because this one, typically, if you're going to see a dip, like a larger dip that gets bought, you're going to see it at like around these 50% or 618 retracement levels. It's entirely possible you could see an even deeper cut like this, where it bounces off of this trend line again. And that's where I think, let me see where the 50 DMA is, because that might actually test that again. Sorry, this is the bear scenario. I'll go over here in a second. Yeah, okay. So this purple line here is the 50-day moving average, and you could see that test there by that 0.786. That's also that lower trend line. So to kind of go back to our other example here, you can kind of see that. I should probably add that to this chart, but but anyways, like that, that's the thing. So you could try like a small long at the 50, and then you could try, or like then it could get stopped out if you don't want to stay in it. If you want to wait for something lower, then I would try like a long at the 0.618 here, and if there is a bounce, I mean there should be a bounce, then you would certainly recover that anything that you lost as you got stopped out. And then also to like if it heads even lower, so maybe like this 0.786, you're still going to get some sort of like 50-point bounce or something, right? Like there's always going to be like nothing ever really goes down in a straight line, and you gotta kind of call it as you see it. So like for example, yeah, you could see something like this, and it could dip a little lower, but ultimately, even if this isn't like a 5-wave up, you could still see, let me get this crap out of the way. Like you could still see, I'll just kind of like draw it out here. So if you do see something like this, you might see, something sort of like this, and then head back down. Or sometimes what these guys do, well, no, we're covering the bullish scenario right now. Sorry, I'm gonna get a little ahead of my skis. So, anyways, what I mean by this is like there's always, it doesn't go straight down. I mean, you can kind of see these little bounces here, where I mean this is only it's a couple hours of market time, but like when you're trading in the moment, it doesn't feel like hours. It feels like, oh, I bought too early or whatever. You just got to give it a little bit of time to develop, and especially if you have like light leverage, like 3x or 2x or something like that, it's not too bad. Like you could hedge, you could do like a 50% hedge or something. Like there's multiple ways to do it, but in my opinion, once you're looking at a structure like this where you've got this big bounce off the bottom, and you've got like a volume shelf down here, you can kind of see that there's going to be some sort of support that develops. So if you do get trapped and it heads a little bit lower, like right around here, odds are you'll have a second chance. If you set like a GTC order to exit at break even or something, odds are you'll have a chance to exit. But markets go up more than they go down, right? But it's just what I'm thinking here is just you've got this big bullish run up off the bottom, but it was sort of unchallenged. I mean, I don't know about you guys, but like just watching this, like they're up there, their little dirty tricks again, gapping it up over resistance and whatever. But I still think it's just people trying to get out because you see these you're starting to see higher volume and stuff, and I think people are like deeper pocketed traders are getting a little bit spooked. But again, that's just my gut feeling on it. But it's still a bullish scenario. It's just more of like short term, rest of this week. We could get a gap closure and maybe a little bit more, and then that'll set up at least Sunday night or Monday or next Monday for a bounce or something like that. But the timing could be a little different. And of course, you guys, I'll post some chart updates like in the channel like normal, just to kind of keep you on track. So like if you watching and listening and stuff like that, obviously you guys know it could go in either way at all times, right? So you always want to be prepared with like the stop loss and everything. But yeah, so that is the bullish scenario. Any questions about that? Anybody see or hear anything different? Okay, yeah, my word is not like authority, so I like to collaborate with other like-minded and data savvy folks. So don't ever think it's like my way or the highway. So see how that goes sometimes. My wife's probably laughing. She could probably hear me. Anyways, okay, so let's look at the potential for the bear scenario. Now, I don't want to spend too much time on this because they've gotten faked out so many times that I don't know. I just don't want to obsess over something that's, it's like I'll believe it when I see it, right? Okay, so let's take actually kind of think here before we move forward. There is a case that this is like a head and shoulders. Now, I'm a big believer in symmetry at the like the daily and the hourly charts. I mean, you can just tell sometimes that a pattern's not done, and I don't think that this pattern is done. Like it looks a lot different than something like this, where it's just a quick stab that was news driven. I mean, this is just like a big old liquidity grab, for sellers. It's just an excuse, right? Where something like this happens, what I've seen in the past is it's really more of like a pattern expansion than anything. So like a right shoulder is probably a little too early. Like we might see, like if it is a bearish scenario, we could see, maybe another maybe like a finishing move down sort of thing, and then we'll see like another sort of recovery like this into December, like Santa Claus rally kind of thing. And that's where I think that a right shoulder would be a little bit more reasonable for like a topping pattern. So I mean, wouldn't be all like that. I mean, it's probably not going to happen like that, but it is still at least a short-term bearish scenario where typically if you see like a 50% retracement, then the whole pattern's like an ABC. And what I mean by that is, like you saw it retraced up to like 0.618 or even a little bit farther than that. Yeah, it's possible, but just freehand drawing, you could have a bit deeper of a move. So just a regular old ABC. This is where I think this actually might be a stretch, considering how bullish everything has been. I'm just being honest. What I've seen these guys do a lot recently in these uptrend markets is, and by recently I mean like, when you stare at charts for the whole day, every day of your life, you start to notice things and patterns and things. And what I think you'll see is it's this typical like big buy up at this like the A equals C sort of thing. It's a well-known pattern. Like it's a well-known thing for lots of traders, and you can see a lot of games in this specific area. So usually what I'd like to see is if you get like really strong support at this like 786 level, then get out of those shorts as fast as possible, because more than likely it's a truncated sort of C leg. The bulls want to still keep it in an uptrend. And what the bears will do though is if they want to continue to sell it down and they want to continue to to like press on whatever short positions they've taken out up here, they're going to sell it through. And then probably what they'll do here is they'll wait to see if there's any big buys to try to crank it up. We kind of saw that. What was that, like last Thursday, where let me kind of show you what I'm talking about. And this is all just educational here. I'm trying to just trying to help with some chart reading, so you can kind of see that sort of behavior around here, like on Thursday. Like you could just kind of tell, like this is pre-market, and then no, I'm sorry, it was not. But it was just kind of real weak. And you kind of saw these like little buy-ups, but you could definitely tell that the bears were in control. And it's not necessarily hard to spot. It's just that when you have days like this, it's very weird where you have to keep your eye on it, because sometimes they'll just let it bounce down here, and there's not a whole lot of volume. It's sort of like, hey guys, we're all done selling. Now it's your time. Now it's your turn to buy, so we can sell higher. So that was kind of why you see a lot of these like V-shaped sort of recovers, because the bullish sentiment is still very bullish overall, and traders are still very bullish. So you see these guys step in and do it. But I guess the main takeaway here is that when you see these sort of things, like you can tell, like, if it just keeps, pushing lower, you don't want to stand in the way, and you don't want to try to buy the dip. You want to wait until you get some sort of recovery. So, like this dip, of course, went a little bit higher than expected, like everybody thinks, or like always happens here. But I kind of expected us to kind of cap out right around here, and it looks kind of like a 5-way pattern. But then there was a gap, and gap and go, I guess you could say. But again, gaps close, right? And we're getting closer, and I think we'll probably see a gap closure here probably pretty quickly. But anyways, the price action, like if you see that the selling is very, very strong, then typically how we like to approach that, like if you want to try to add some longs anyways and try to capture a bounce, is like you could set some buy points like right above recent highs. So today, the market kind of ended like in a bit of a triangle, or like a ascending wedge, whatever. I mean, typically, these resolve to the downside, like you can kind of see here, and you just get a lot of consolidation down here. You'll probably see some more screwing around here before an actual move happens. But I guess what I mean by this is you can set a buy order above the high or whatever, and because if they make a new high, then odds are the pattern isn't finished yet. So you might see something kind of like this, where it retraces up a little bit more and it turns into be a bear flag, but you could still make money in a bear flag. So just saying, just in case you want to play something like that. But the astute trader would not enter here. They would wait until they figure out if this is actually like a head and shoulders, or if it ends up being weaker. I mean, the volume is still on the decline, so you're already noticing a bit of a convergence here with selling and volume. It just seems like the bulls aren't really enthusiastic enough to buy. So overall, I guess this would be, I think, a reasonable downside target, at least for now. If you're looking at the S&P, let me draw that here. Yeah, if you're looking at the S&P, oops, you'll see here that you say probably yeah, I mean, you could see a potential for like a buy up down here. So like the 6650 level, there's a lot of volume down here, pretty big blue bars. So you can consider this like a truncated sort of pattern. Like maybe it'll make it a bigger triangle or something. Maybe it's defined the range. We don't know yet. The only thing that we do know is that there's levels and stuff here that need to be revisited, because we've just we ripped up the space here in only a handful of days. And I mentioned the other day that like the RSI kind of waffles from overbought to oversold in like a 1 to 2 day time frame. So but my eye is on the volume, and if I see a volume divergence like this, and you see kind of like this teetering on the edge here, that to me that's like a get out kind of signal, at least for longs. In a perfect world here, you would see at minimum like the 65.87, and that would probably fall in line with I mean, this trend line here is getting a little sloppy, but yeah, it is what it is. So it's kind of like a megaphone kind of weird thing, whatever. I think it's actually a little easier to tell on the Nasdaq. But I don't know. I'm kind of thinking that you'll see something like this where it's like short-term bearish, but like longer term. Sorry. No, sorry. That's right. Like longer term bearish, bullish, but long. Oh, you know what I mean. You get this ABC down, and then you could see like another drive up to like a higher B wave, and this ends up being kind of where this stops, or maybe like 23,820 or something. We just don't know. So for now, it's still a semi bullish sort of longer term pattern here, but I do think that there's going to be like a gap closure or some sort of some sort of something over the next couple of days. Again, what is that? Like the inflation stuff, PPI, that kind of thing, retail sales, like those don't typically move markets, but like the CPI does. And if we get some sort of lead on that, that'll probably set the tone for Thursday, Friday. And that's probably what these guys are waiting for. So that's kind of the overall of both the bullish and bearish scenarios. Does that make sense? Or am I just talking a lot? I'm talking a lot.
Yeah, I would say that makes sense.
Okay. All right. Any like hypothetical questions or anything like that? I mean, it's like I kind of get lost in your own vacuum sometimes of analysis where, it's helpful to hear what other people have to say sometimes. So, if you guys have any questions or, theories or something, hunches, half-cocked theories, whatever, put them in the discussion channel, and happy to get to them. All right.
I see there are a lot of people that seem to be hedging their positions a lot right now.
Yep.
So
yeah, and
I don't think we're real. It's like we should get a retracement, but this market is so crazy that nobody knows for sure.
I agree. So let me show you guys what I've got here in these indices. So I mean, it's just really like SPX has definitely much higher concentration of gamma, so it's a lot easier to look at. So if you look at kind of like the overall gamma map here, you see, there is a call skew, but you still have these lower strikes, like 6,800. It's only 35 points away, but you still have these higher spikes, and I kind of think I think these are more like spreads, or like somebody's got a large position that's like slightly bullish, but like still defensive, because you don't typically see a lot of these equal call or relatively equal call and put spreads.
Mm-hmm.
It's pretty, to me, it's pretty stark. Like this is, for example, like this one out here, this outlier at like 7,000. You don't really know like when those expiration dates are. You just know that there's a concentration there, and these concentrations act like magnets. So you've got this 6850, which we saw today, and I think we actually saw a lot of call gamma kind of roll off the books today, and at least like with zero DTE, but with other call gamma, we kind of saw it decline a little bit today. But let's see here. So we've got 1219 is the next largest expiration. We've got a lot of, not a lot of call gamma expiring for 1121, but I'm kind of thinking that people are betting on like a Santa rally, that kind of thing, but that still leaves a relatively large vacuum until then. So it is entirely possible that you could get this sort of I think like we were showing before, like you could actually get a deeper cut here and kind of surprise people, but then get this sort of recovery. You can get something like this that recovers in December, something like that, and makes that makes like a head and shoulders, or maybe a double top or something like that. So does that make sense? Well, Don, I think you're right. There's a lot of people like kind of hedging their bets. It's not easy to tell from like the concentration maps, but once you look at if you look at some of the tape data that comes through, you can see just like people making spreads. It could be generally bullish, but
Mm-hmm.
I think it's a lot more evenly distributed than right. Yeah, we could look at this the skew too. Yeah, so you can see that just by looking at the skew between now and let's say like that December 19th, you can see that all like the puts are kind of trading at a premium versus like the calls. So, or at least like the kind of like how the volatility swings with that. So it's certainly more lopsided towards risk. So that must mean that the overall markets are thinking that, we'll at least have some sort of, larger pullback here in the near term before like middle of December.
Well, it's sure not showing up in the volatility though.
Yeah, that's right. That's right.
In the index volatility.
Yes. Yeah. That's it's weird because I think part of it is getting crushed because there is oops, sorry. Oh, I think I did something wrong. I think I got to reshare. Hold on. There we go. There we go. Sorry about that, guys. Yeah, you're right. Like I think VIX is getting stepped on because it's still the forward curve, and I think that because there's still some like a lot of call gamma in December, you're not getting a lot of that UVIX movement that we're looking for. But that could change. If there's a lot of selling, that a lot of that call line could dry up. So, all right. If you guys have had enough of equities, we could talk about some of the rest of the stuff.
Okay.
All right. So something interesting today was the Dow. So the Dow hit a major sort of extension level here. This looks like an ending diagonal, pretty clear. And I think that the volume was dropping off a cliff here the second that it did get hit. So I think plus is very overbought. So you might see some sort of, in my opinion, I think the Dow looks like a great short right now, but I don't want to short anymore. Anyways, but like the Dow, I think it's a major level. There should be at least a little bit of a pullback. If you want to take like a little bit of S Dow out or something like that. I can't imagine it not being profitable eventually if they keep driving it up. But you'll need participation from everywhere else. All right, so the yield. I think the yield's just doing a weird sort of kind of B wave thing. I know that's not a scientific term, but I kind of think you might see something like this. Just because we get like CPI data, or at least something that's coming out. You just see like a lot of consolidation. But what's going to be interesting to see is how yields react, in the longer side of the curve. So Don, I think you brought that up the other day, where like the long side of the curve is also increasing with rates too, even with the cut. So something tells me, bond traders' math is better than the Fed's math. All right, so gold was a surprise. I don't know why it was a surprise. It's it's just up, buy. But you can certainly see that there's been a lot of selling with it, and gold has been correlated with equities, which is really weird. It's just a weird time to be in the metals. I think that you might see gold and silver didn't really test their 50-day moving averages, and I think that they probably should and will sometime in the near future here. But again, like I probably wouldn't short it. I would much rather wait for like a bottom and then buy versus short metals, because like for example, yesterday you're like, oh cool, look, we've got some hit up against the 50, and then you see something like silver or it just went straight to the moon again. And if you shorted, you got blasted. So that's not cool. So there's a lot of buying, but the buying I think is misguided at this point in time. Man, the dealer's got to be so massively short silver futures. I wouldn't want to be a market maker.
No,
So anyways,
I think everybody was waiting for it to pull back to a certain level, and it never did. So
yeah,
and then it started to go up, and they jumped back in.
yep, yeah. So
And,
yeah, go ahead. Sorry.
yeah, I mean, if we get a hot number from the from the CPI, they'll probably sell off. But
Yeah, we'll see. And
but yeah, right now they're going the same direction as the stock market.
Yeah, and I think that if we do see some sort of measurable selling, you could see you could see something like this maybe, where you get this one little last hurrah, or you could see, sort of a very, very slow kind of distribution like this, and then still see another high. This could be the start of like a wave two, something. Like, I just don't know. Like I'm gonna watch bonds though, so like you could see this all the way up to 4,500.
Well,
but
silver got within sniffing distance of the high.
sure did.
It's
Yeah.
only like 20 cents or something.
Yeah.
So
Yeah. Yeah. So I don't know. My fund money account, I might actually take like a silver short, but like a put spread or something. So there's at least a little protection in case you get blown out.
And it's possible that there's a squeeze going on somewhere.
Yeah.
I don't know if I don't know if I'd want to short it.
Yeah. I was thinking, I'm like, well, every time I think, it's a good idea, it ends up being a poor choice. So like I said before, I think, buying a dip in metals is better than shorting.
I think there's something going on in the London market that is that we not 100% know about.
Oh, okay. Yeah. I mean, if you get more info about it, please pass it
I don't
along.
have any info about it. I just think they got all screwed up with Trump with his when they were worried about whether he was going to put tariffs on the metals, and who knows?
Yeah, you never know. There could be all these weird swap agreements or whatever.
Yeah.
You never know. Okay, so let's talk about like oil. So oil, I don't know what is going on with oil. Just games being played. That's what's going on with oil.
Well, OPEC announced that there's a lot more oil around than they were saying previously.
Okay. Well, we still got some decent buying, throughout. So like, there's still going to be, some accumulation. So I'm thinking maybe you might just see something like this instead, where it's a very muted sort of sea leg and not anything really energetic. I think this is probably a little overdone. I mean, the RSI is really, really negative. But I guess we'll just have to wait and see. I think it's just gonna just keep drifting lower. Gasoline consumption's down. Yeah, canceling flights. So not enough demand for jet fuel, I guess. So yeah, I think things are just kind of screwed up with the commodity markets at the moment. But the energy market, I think it was looking strong here for a second. And then when you look at something like natural gas, what did I do to this one? No. But before I flip, look at all that buying in oil. A lot of buying.
I don't know. I don't know what chart you got up here.
Natural gas. Oh man. Sorry guys. You gotta tell me, what are you doing?
Yeah, it didn't look like the right chart.
Okay. Sorry. All right. I'm sorry. I'll go back to the yield, or the Dow. So here's the Dow. It's got that right at the top. Where did it flip? I don't think you guys saw any of this then. Okay, so this is the yield. I was talking about, like just this little bit of a ABC, depending on what would happen. And for gold, this is where it kind of looked like it was setting up here, but with all the selling with that. And then silver, and you're right with the snipping distance. But yeah, you can kind of see it's just going bananas here. And then the oil chart, this is where it is a bit of a surprise, but our RSI is super oversold. I think there's a lot of just demand is a little bit less than what people expect. But gas, this is what the chart I wanted to show, the oil. If I can find it. There it is. So oil, it's got a ton of buying here. It had a bunch of selling, but now you can see it's just going gangbusters. So I think that it's becoming a much more popular thing to trade. These ETFs get a little bit more popular, of course, over time. But gas itself, I think is we'll know more about stocks and things like that. But as far as I'm concerned, like, I don't want to take profits just because like I kind of feel like it's got a little bit more, gas in the tank to get us to the bull target 1, where you can see like this 4.697 level. It'd be like a test of this 200, but after it hits that, I think you could probably see a pretty fast rejection, kind of like oil. But I don't want to just declare that it's going to happen, because you never know. There's been a ton of buying. There's looks like there's a lot of institutional interest in oil, so on and so forth. So I think, of all the charts, gas is probably the strongest longer term. Oil, it just keeps getting punched again. But we'll see. I've always been surprised by gas and its resilience, where like it could get totally knocked down one day and then the next day it's up 5%, 10%. So it's not for the weak, that's for sure.
Well,
all right.
There was a lot of cold weather this past week.
Yeah.
Now they said it's supposed to get warm again, but we'll see what happens.
Yeah, we'll see. So for stocks here, I don't really expect this to sell down much before Nvidia. I kind of actually think it's maybe setting up for like another 5-wave up, but just like a brief one. I mean, it's got to cool off sometime here. Like, stocks is just ridiculous. You can start to see the cracks in the AI, the AI narrative. Even when you got, like Sam, right? He's talking about all this, how AI is in a bubble, but he's going to raise $1 trillion for OpenAI. Sure, why not? Not a bubble at all. But anyways, stocks here I think is it's been very, very high for a long time. I think a reasonable pullback to test the 50 or something is in the cards, but I think it's I think it'd be more like a viable dip. Eventually, you are going to see a pretty pretty decent size. I think at least you're going to see a pretty decent size pullback. I don't think it's going to be like massively fast or anything, but I just think that over time, reality is going to set in with some of these revenues that aren't being returned with the amount of investment with AI and all that sort of stuff. We'll see. I think I'm a little too early on that. But for stuff like Bitcoin, saw a pretty interesting analysis from Robert Ballin. I don't know if you guys follow him all like on Twitter or X or those other sites, but he did some analysis where he was saying that over the last couple months, the Bitcoin price has been it's got like a 0.93 correlation, so super strong with the S&P. So one will lead the other, but it looks like Bitcoin's leading this one, where the retracement wasn't very high. It looks like there's a lot of institutional selling at these higher levels. The enthusiasm's kind of waning a bit, but also I kind of think that people are out of money. They've invested it in everything, and everybody's so invested and levered that there's just the inflows. And I could be wrong. It's just speculation, of course, but I think that all the crypto bros have already got their life savings and all the different coins and stuff, and the big boys are taking profits and working the trade. So I think we'll probably see a little bit more of a test, and like I mentioned at the beginning of the call, you might see a big bounce at this 0.786 level to kind of truncate the C leg. And and it's also a very longer term trend line. So I think that's probably where you'll see a bounce with MSTR as well. So if you got kind of we retested the low today, so I'm glad I hedged up, but I definitely think that you could see this 205. I think that's more than reasonable. If anything, that would be minimum. You could see even lower than that, at 166. But after that, you should be able to get some sort of sizable bounce out of that, just from the chart itself. It looks like a pretty easy ABC to get. So anyways, so I'm gonna hold on to those hedges for a bit. I got some alerts and stuff to take profit, but if Bitcoin's looking like this, especially if you see a move like this with Bitcoin, I think you're going to see a lot of interesting things happen. If you see something like this, then odds are you're going to see an any diagonal or something like this, and then it'll kind of head back up for a bounce. That's at least my opinion on the matter. Nvidia, I think this is just going to kind of grind, and as you know, as these guys take profits here before the before the Nvidia show next week. But that's next week, right? Yeah.
I think it's Tuesday night.
Tuesday. That's right.
No,
That's
Wednesday night. Wednesday night. Wednesday
Ah,
night.
yes. So yeah, I think the next couple days will be telling for this. I mean, you might even just see like a small ABC pullback, because there's going to be billions of dollars sitting on the sideline here waiting for those earnings. So Nvidia is kind of like a don't touch it right now sort of play.
Well, it'll be interesting to see, the option premiums in front of the number.
Right. Exactly. Yeah.
The last earnings, the last time they had huge premiums and they collapsed the next day.
Yeah, exactly. Yeah, the market makers making lots of money on that one.
Yeah.
I kind of feel like Tesla's getting sold down here. Like this is a really big sort of consolidation zone, and it's mostly selling from what I can see here. Like if you kind of zoom in over the entire thing, it's like you got a lot of these big sell spikes, and it's a very lopsided sort of distribution profile. So I think once like equities break in general, you'll probably see probably a steeper sort of sell with Tesla. It's right at that 50 daily moving average. So yeah, overall I think it could kind of go either way, right? Like you could make the case that this is a triangle. We got another leg up to go, and but it's the market that just keeps on chugging. So but that's kind of it. Any questions, comments, concerns?
I'm good.
Okay, Mr. Anderson.
Can't think of anything right off.
Okay, all right. Well, you guys know where to find me. So
Yep.
Yeah, just let me know or post something in the discussion.
Okay.
Okay.
All right, guys.
Thanks
for joining, and
All
we'll
right.
see you tomorrow.
Yep.
Have a good dinner.
Yeah. Thanks.